Hey guys, I'm Connor. I'm on the Now Crowd team and I'd like to welcome you to our third lunchtime session. Today we're joined by Barry Coates. Barry is the founder of Mindful Money, a charity with the mission to empower all New Zealanders to be responsible for how they invest their savings. For anyone new and joining us, the Now Crowd is supported by the Sustainable Business Network. SBN is New Zealand's largest, longest standing sustainable business organisation whose network includes over 600 organisations throughout New Zealand and across diverse industries. The aim of SBN is to deliver tangible impact in three key areas: climate, water, and waste. The Now Crowd is our network of young professionals who are in the early stages of their careers and are eager to drive sustainability initiatives within their organisations. The Now Crowd aims to help young people build capability, confidence, and impact around sustainability, and we do this through a range of tools, resources, events, and mentorship. If you want to know more about the Now Crowd, get in touch with Ayla, AYLA, at sustainable.org.nz. So before we start the event with Barry today, how many of you guys actually know where your KiwiSaver is being invested? You should see a poll popping up on the screen below you now. There we go, all answering that. So most investment strategies have typically focused on financial returns and risks, ignoring real-world impact. If we want to build a sustainable society post-COVID-19, then a major part of the solution is investing ethically and making a positive impact through our investment choices. When I first looked around the Mindful Money website, I was shocked to find that 15% of the ANZ KiwiSaver Growth Fund is invested in issues of concern, things like animal testing, fossil fuels, gambling. Many Kiwis want to invest ethically, but don't have the objective information and research to compare the options. Barry founded Mindful Money with the vision to empower all New Zealanders to be responsible for how they invest their savings. At the end of Barry's presentation, we're going to have a Q&A session. I'd encourage you all to post your questions for Barry using the Zoom questions function below. All right, time to hand over to Barry.
Kia ora, ngā mihi nui kia koutou, nā mai haere mai. Thank you very much for inviting me to join you here today. I've got a presentation, so kind of power corrupts and PowerPoint corrupts absolutely. So I'll run through a few slides and then I'll show you some stuff from the Mindful Money website, and then we'll open up for questions. So I'll try and whiz through some of the slides quite quickly, and I'm sure I'm going to be able to master the transition technology, but here goes. The first thing is, here we go, I'll put this into full mode. There we go. Oops. So give you a sneak preview. So it's your money, use it to support a better world. So the whole idea of Mindful Money is, as Connor said, was empowerment. So we want to empower people to be able to understand where their money goes and to make choices for a more sustainable use of their money. And so I'm going to show you kind of ways that you can do that. The starting point is very much a kind of a why, and the why is for me personally, climate change, and particularly climate change in the Pacific. I used to be head of Oxfam New Zealand for a decade or so, and these kind of images are becoming too common in the Pacific. And climate is a justice issue. That in fact there are so many places around the world where the people who have done the least to cause climate change are bearing most of the problem. And so it's both a justice issue and an environmental issue and a planetary issue. So if I look then to the Sustainable Development Goals, I was very much involved in the Millennium Development Goals that preceded these. And the Sustainable Development Goals is a broader context. And we have to sort of remember when we're sitting here that the caption here says, be sure to wash your hands and all will be well, as the COVID-19 crisis sort of unfolds, and then behind it is a recession but actually the big damage is going to be done by climate change and increasingly by the biodiversity crisis that is affecting the world's ecosystems. And this was put graphically really nicely by an ex-colleague, Kate Rayworth. I think many of you may have read her book, Donut Economics. If you haven't, you'd really enjoy it. It's a fantastic read. As she called it, it's economics for the 21st century. And she describes this outer kind of core as coming from research from the Stockholm Environmental Institute around all of the ways we're overshooting our planetary boundaries. But that's just an environmental perspective. And what Kate does really nicely is she then draws in the social foundation. She highlights the areas, both from the ecological and also from the human rights perspective of where the shortfalls and the overshoot are. And the answer is we need to take action really urgently, but I guess I'm preaching to a choir of the converted. So, where does finance fit in? This cartoon says a lot to me. Yes, the planet got destroyed, but for a beautiful moment in time, we created a lot of value for shareholders. And for me, that says it all, that actually we've had a finance system that operates according to the metrics of risk and return and financial measures and completely ignores the real world impact of what's happening. So money gets funneled into pollution and exploitation, but doesn't go to the areas that members of the public and many institutions want the money to go, which is things with high sustainability, companies with high sustainability standards, and things that can result in good for the planet and good for people. So, as I said, this is all about empowerment. I love this image of facing down the charging bull of Wall Street with people power. Does this make a difference? A group called Nordea, which is Scandinavia's largest financial services company, said moving your funds to savings to sustainable funds can be 27 times better for your carbon footprint than eating less meat, using public transport, reducing water, and flying less combined. Now, I've had a close look at the methodology, and I think some of the methodology could be questioned. I wouldn't kind of hang my heart on the 27 times sort of more powerful, but actually the message here is that what you do with your money is incredibly important and really important in relation to other things that you may do as an individual on sustainability. So what do the public think about this? Every year, Mindful Money joins with an organization called Responsible Investment Association, and we do a survey of the public. And this survey says that in 2019, 83% of the public said that they expect their KiwiSaver and their investment funds to be invested responsibly and ethically. And that's a huge rise on what that figure was in the previous year. It was around 72%. So that's a big rise in a year. There is a massive change happening in public awareness around ethical investing. And we asked also in the survey about what do you want to avoid. This is actually from the 2018 data. People want to avoid companies that practice animal cruelty through testing products on animals, or cruelty through factory farming, or export of live animals, which is a real current issue. They want to avoid companies that cause human rights abuses and labor rights abuses. They want to avoid tobacco company, gambling, palm oil, weapons, fossil fuels. And fossil fuels, I think in this year's survey that we're just embarking on, will be far, far higher than that. But still, look here, this is 76% of people want to avoid fossil fuels. And then there are other things as well. So if we take those issues and then we said, so what does this mean in terms of where the money actually goes? So we have added up across all 280 KiwiSaver funds where the money goes to. And if you look, 23.6% of the bad investments, or in fact, almost $1 billion goes into fossil fuels. Weapons is a bit smaller. Human rights abuses, $762 million. Animal welfare, $1.5 billion. So investments in issues that the public say they want to avoid total $4.1 billion. And they're 6.3% of total KiwiSaver funds. So this shows that people may want to avoid these things, but your KiwiSaver provider hasn't got that message. And some of you may remember in 2016, there was a furore over tobacco and cluster bombs. So what happened was some funds excluded tobacco, and that's why the figure for tobacco is quite low. But it's still 16 million, by the way, but it's quite low. And so the question comes, if many of these funds excluded tobacco, why didn't they also exclude fossil fuels? And why not weapons or human rights violations? So, you know, this is not just a kind of feel-good kind of thing. This is backed up by real financial kind of sense. Here's what I think is just such a powerful chart. This is a chart on the top line of what's called the S&P 500. So it's the average for all the US stocks, the US equities. And it goes up, it's up by about 50% over the past 5 years. Here's the oil and gas image. Sorry, I'll go back one. Here's the oil and gas index in yellow here. And over the period of 5 years, that dropped by 63%. And down the bottom is coal, which dropped by 86%. So there is a massive change in fossil fuels and a big decline in fossil fuels compared to the market. So what this shows is that actually, if you're investing in fossil fuel companies, your portfolio is not doing well. Your money in KiwiSaver is not doing well. And so this is the argument to say that if you invest ethically, it doesn't cost you extra money. What it says is research shows that if you invest ethically, actually your returns are at least as high, if not higher, than conventional investing. And that's a really important implication. So here are the perceived, so there's a gap here. The gap is between people wanting to invest ethically and people who actually do so in responsible funds. And so we asked about that gap. We asked what the barriers are to responsible investing. And here it's kind of, I don't have the time to look and compare. And that's 55%. And that's particularly people who are time poor, don't have the time to do research. We've talked to people with finance degrees who said, listen, I spent a week trying to figure out which ethical fund to invest in. And after a week, I gave up. It was just too complicated, too many greenwashing claims, not enough comparable data, and it was too difficult. Not enough independent information is also important, and a perception that there's a lack of credible options to invest in. So what we did on Mindful Money is we set up a website to try and address those issues. So the website is www.mindfulmoney.nz. And what we've done is we've designed a website for radical transparency. And the idea of the radical transparency is to say we can show you what you're invested in every single one of the 280 KiwiSaver funds and now 390 retail investments funds. So excuse me for a second, I'll just switch over to the website. Here we are. Let me just bring this up. Oops, wrong one, sorry. Okay. Sorry, it's a little bit clunky. So this is the website for Mindful Money. Let me just show you. So we've got is basically two sets of funds. You find out about KiwiSaver funds and find out about managed funds. So if you want to find out about KiwiSaver funds, just click on the Get Started, and if you go down there, it says, do you want to check a fund? So in the introduction, Connor talked about an Anz Growth Fund. So let's just take a look. So we start typing in Anz Growth, and if I spell it right, it'll come up. Anz Growth. There we go. There's the Anz Growth Fund. And I'm not picking on any particular fund here. I could have picked on any of the banks or quite a few other funds. But if we have a look at what the Anz Growth Fund is invested in, we can see that they're invested in some issues that the public may be concerned about. So you just hover over these and you see that there's 2.3% in alcohol. There's 6% in animal testing. There's almost 2% in fossil fuels, etc., over the other areas of concern. And we can take a look at this in a bit more detail if we click on the fund details, and then we tab down and you can see here's that chart again of what the fund's invested in, and here's the companies. So for example, the Anz Growth Fund is invested in BHP Billiton, which is a major oil and coal producer, as well as mining. Oil Search, down here you can see Royal Dutch Shell, BP, Repsol, etc., Total from France. And further down you see Equinor is one of the more sustainable of the fossil fuel companies. They're invested in weapons, by the way. Some of those are making nuclear weapons, and you can see alcohol, animal testing, long list of companies involved in producing products that are tested on animals, and all of the data is there. So, you know, this is the first time this data is available in New Zealand, and actually it's the first time that the data is available anywhere in the world. We've looked around to see if there's anything comparable, and there's nothing quite like this because of the requirement that the government puts on for these funds to report, and that gives us the starting point to analyze all of the things that they invest in. There's some decent government regulation that allows us to do that. So while you're there, that tells you about the growth fund, and you can also look and compare different funds. And then you can move on to say, okay, I want to look for a more ethical fund. You click on the Find an Ethical Fund, and you're prompted. Oops, we just got ahead of ourselves here. So let me just go back a bit. So I'll just go to that. So we find a fund. Oops. Sorry, I think I would be able to navigate my way around this website by now. I've been using it enough. So we appear to be locked into the results. Let me get back out of the results. I'll show you. Can see the fund finder on the website. It leads you through some questions around what you want to see in your fund, and basically it goes through your values, what approach you want, and risk factors you have, and then it finds the best fit for your criteria. And what you see is these kind of results come out. So it says that the best fit for your criteria a Mana Growth Fund, a Booster Fund, the Socially Responsible High Growth Fund, the CareSaver Growth Fund, or the Simplicity Growth Fund. And you can find out more information on any of those. Click on the switch to this fund, and you can switch your KiwiSaver. Basically, the provider does all the back-end stuff to say that you switch from one fund to the other. So it's really quick and easy to use the website. And I should take a few lessons in how to do it. Here's the run the fund finder again. So again, the criteria: what are your values? What do you want to avoid investing in? What approach is important to you? Avoids your concerns, selects better companies. You can choose lower fees or higher past returns. What's your risk profile? So we may choose to have a risky portfolio, which is likely higher returns. You're prepared to accept some losses, but also some big gains, and you're in it for the long haul. And again, you click find the fund that fits, and you get to the results page. So that's the kind of way that the website works. We've been going for a year, and we've just added on the investment funds as well as KiwiSaver. The message is getting out to the public, but we're a charity, and as a new charity, like anyone else, we struggle to get the message out far enough and wide enough. So one of the things that you can help us with is actually in being able to help your staff to find a fund that fits. And let me just go to the next slide. Oops. I'll have to go back to the presentation. Sorry about this. I did have this working so beautifully before. So this is basically showing the kind of way you can use mindful money. And we've been doing presentations around kind of values-aligned organizations, and some of you on the call might have been kind enough to invite us along to do a presentation. But we kind of can help your approach to corporate sustainability, but more important, we can give you a chance to engage your staff with the kind of issues that they would find to be important. So, you know, the idea of using the Mindful Money platform to help staff find an ethical KiwiSaver means that you're helping them to do some stuff which is aligned with corporate values. The tool that we've got is flexible, it's quick and easy to use. Research shows there are good returns. It's objective information run by an independent charity. It's strong research on the funds themselves. And it's not a single fund. We're offering on our platform 26 different funds from 10 different providers for each of KiwiSaver funds and investment funds. So that's a way we're kind of able to work with companies on being able to engage their staff in these issues. So it's a presentation generally over a lunchtime, maybe half an hour, 45 minutes. We come in, make a short presentation, show people through the website, and then we give them an opportunity to try it. And they can find a fund that fits their criteria. So let me stop there, and we'll take some questions. I'm sorry about the rather clunky sharing, but I hope the message got through okay.
Here we go, just turning myself back on. Hey, thank you so much for that, Barry. That was super insightful. Before we start the Q&A, I thought I'd share the poll results from question 1, and that was how many of us actually know where our KiwiSaver is being invested, and 86% of us attending today said no, we do not know where our funds are being invested, which again is, yeah, very, very telling. I mean, I was also one of those. I only had a look earlier in the week before our presentation because I'm by default, I'm in the ANZ KiwiSaver Growth Fund, which, as you said, yeah, 15% goes into issues of concern. So we've had a lot of questions come in. I'll just go through this now and fire a few your way. I see back in March, the government made a decision to ban KiwiSaver default providers from investing in fossil fuel production. Has much come of this?
Yeah, well, that's a really big step. We lobbied on it. Other organisations did. I'm also a trustee of 350 Aotearoa. They did lobbying and some campaigning on it. And the government did the right thing. They said, if there's the next round of default providers, so they review default providers every 5 years. So the next round of default providers will have to be fossil free in order for them to qualify as default providers. And that's huge, not only because there are 400,000 people who go into those default providers and they don't actively choose a fund, but also because these providers have to design a fossil-free fund, many of them are applying that across all of their fund offerings. And so it's a way to shift the market, and it's a really significant thing to do. Many of you may be aware that there's a very strong divestment movement internationally. $12 trillion is already divested internationally. And as we've seen from the chart on fossil fuels, excluding fossil fuels is not at all bad for your investment returns. In fact, the funds that have already excluded fossil fuels, and there's a list of them on our website, are the ones that have done particularly well.
Sweet. Another one, you mentioned greenwashing. How do you tackle greenwashing? It seems every company these days claims to be ethical, responsible, or green.
Yeah, exactly. It's a real problem. Mindful Money was kind of born out of the need to provide some assurances to the public about greenwashing, and it's why we're a charity. We're not set up to make money. We're set up to be a kind of an independent research voice, as well as a kind of campaigner for ethical investing. And so what we do is we have some criteria to say, here's some benchmarks that you have to meet in order to come onto our fund and be recommended as an ethical fund. And the benchmarks are twofold. Firstly, you either have to exclude the kind of things, a majority of the kind of things that the public are worried about. So those 10 issues of concern that we talked about, that were shown on that graph, if you're a fund that excludes most of those, and the big ones like fossil fuels and weapons, then you can qualify to come on the fund. Or if you get certification that you're managing your funds in a way that is basically putting pressure on companies to change, then you can also get on to the website. So there's only one certification system that is really credible. It's run by the Responsible Investment Association. So we take that certification and we take the funds that have the broad exclusions. And that's the way we set a benchmark, because they're both verification points. We don't rely on marketing claims by funds because, as your questioner said, everyone says that they're ethical and responsible. So it's a verification that's really important.
Perfect. I'm going to combine a few questions here. A lot of us these days not only have KiwiSaver, but we're also involved in investment platforms such as Sharesies. Does the website include index funds?
Yeah, we do include index funds on there. So we include both direct index funds via Smart Shares, but also the investment funds that are largely dependent on index, like Simplicity funds. So Simplicity is one of the funds that uses passive investing or index fund investing, and they exclude fossil fuels and weapons and a number of other sectors. So they're one of the funds on our website, and Smart Shares is the other one that isn't actually an ethical fund on our website for most of their index funds, because most of the index funds don't have a full ethical screen. There are some funds that have a partial screen, but not a screen that would meet our criteria. There is one fund called Superlife Ethica, produced by SmartShares, that is on our platform. So you can invest in index funds via the Mindful Money site. And by the way, when you do use our site and you choose an ethical fund using our site, they give us a contribution towards our ongoing operating costs. And we're a small charity, so that provides a small amount of money to help us pay the bills. So if you are switching funds, it's always nice to use the pathway through Mindful Money. It just provides a little bit of a help towards our costs. So for people who may not know the distinction, the index funds generally invest in a tracker of a market index. By contrast, active funds are picking individual companies to invest in. And so we've got active funds on our website, funds like CareSaver, Booster, others that are actively managed funds versus passively managed funds like Simplicity.
Perfect. Another good one here. Any books, podcasts, etc. You would recommend to help me upskill on impact investing?
Yeah, there's a bunch of stuff on internet. There's a New Zealand network on impact investing, although it doesn't really have many podcasts or videos. Mindful Money runs a weekly seminar series on Wednesday evenings at 7 o'clock, and we're about to start our impact investment series. So we're going to do 3 or 4 impact investing focused seminars. Will include some of the impact funds that have recently been started in New Zealand, like Purpose Capital, Impact Enterprise Fund. There's a new climate venture fund, the government's green investment fund. So we'll include representatives of those on there, as well as some of the people who have been founders and really pivotal in getting the impact investing movement going in New Zealand. So that starts the week after next. You may also want to check out a podcast by somebody called Stephen Moe, M-O-E, and it's called Seeds. And it's a fantastic podcast. He recently did a dedicated session on impact investing that had a lot of people on it, and it's a really good series as well. Otherwise, internationally, there's just a wealth of stuff on impact investing around. Oh, by the way, so the way Mindful Money has worked is we want to start where people are, which is kind of, as we've seen, people don't really know what's in their KiwiSaver fund. And the first thing is kind of do no harm, get all that bad stuff out of your portfolio, get the fossil fuels out, get the weapons out, etc. But then we're looking to take people on the journey to say, and you can invest in impact funds. And part of the problem at the moment is not any retail funds available to the average investor. You have to be a kind of professional investor with lots of money in order to access many of these funds. But later on this year, we're going to have a page on our website that's just a free directory that says, even if you're not one of these professional investors, here's some ways you can invest in impact investing. And we'll give you some direct links into some of the international impact funds, to some of the funds on crowdfunding. So there are ways you can invest on Pledge Me offerings or Snowball offerings in order to be able to invest directly in impact funds. So we'll develop a directory around that.
Sweet. One on ESG funds. I've heard a lot about ESG funds. To give people context, I'm pretty sure that's environment, social, and governance.
Yeah.
Can you run us through this as an investment strategy?
Yeah, cool. So what I said, there are 2 ways to get on the Mindful Money website. One is via avoiding things or excluding things. That's like, excluding fossil fuels. The other way is via what's called ESG management, environment, social, governance management. And the fund managers who practice that undertake to do two things. One, they avoid the very worst of the companies in any sector, the really bad ones. But the others, they don't necessarily avoid all of the fossil fuel companies, for example. What they do is they invest in the companies that they are convinced can make a transition to renewables, for example. And what they do as an engaged investor or an active stewardship investor is that they push these companies to go more towards renewables. So it's an engagement strategy. And as I said before, it's really hard to be able to tell if funds are really doing it versus saying that they're doing it, because most of those engagement strategies happen behind closed doors. That's why we say that the funds on our website have to meet a certification scheme in order to show that they're actually doing it. Again, there's some stuff on our online seminar series. We've done 26 online seminars, and some of them relate to this ESG investing. And we've actually next week got an interesting one with Kathmandu that is on the seminar together with an investment company called Harbour. So Harbour and Kathmandu are talking about how Harbour as an investor engages with Kathmandu in ways that supports and encourages Kathmandu to go further on their sustainability journey. So it'll be a really interesting seminar next Wednesday, 7 o'clock. Details via my Mindful Money website.
This is a really interesting one. I was just having a look around your website and found out that my fund is returning 3.5% annually, whereas the fund recommended for me, the NAHA, if I've got that correct, the Anz Growth Fund showing 11% returns. Is it easy for me to switch KiwiSaver fund providers?
It is really, really easy. So you go to it's called a Mana, and it's an Islamic fund. So they have a really strict mandate on not investing in, for example, stuff like predatory lending, or of course meat products and non-halal killing of animals. So they have some really good ethical standards. They've had just a bang up couple of years in terms of their returns, including over the COVID crisis. If you just go to the Amana funds and then you click, it says invest or switch to this fund, then it'll take you straight through to a link. You basically put in a little information about yourself, your name and your email address, and then follow the link, and that takes you straight to their application form. So that's the way the Mindful Money works. If you see a fund that you like, you click on the link, you go through, you fill in the form. Honestly, it generally for most people, it takes 5 or 10 minutes, and it's absolutely free. It costs you nothing to shift your KiwiSaver fund. One caveat: there's out of all of these sort of 28 providers, there's 2 that charge an exit fee, but that's all. Everyone else, it's absolutely free, and the exit fee for the others is about $30.
Oh, wow, thank you. Here's a simple one. What is your top investing tip?
Top investing tip is to know what the impact is of your investing. And a lot of people will give top tips around financial returns and so on. My own viewpoint is if you get a company that is really committed to sustainability, then they're going to have brand loyalty and trusting consumers. They're going to have motivated staff who are treated well. They're not going to have environmental liabilities. They're going to be more likely to make a financial return. So if you follow your instincts as somebody who cares about sustainability and say, I want to invest in companies with high sustainability standards, then actually you're fair way down the track to saying, well, these companies are more likely to be those who are going to earn good returns. This is not financial advice, but it's a philosophy of investing that may prove useful. The other thing is it's good to be in it for the while, so don't kind of watch your fund every week and say, oh gee, it's gone down a bit this week, and so I'll switch to another one. Actually, most of these investors are there for the long term, so choose the one that you feel comfortable with from a values perspective as well as the investing approach perspective, and then stay with them for a while to make sure that you can see what's happening to their returns.
Perfect. I've got about 2 or 3 more questions for you, Barry. Before we go to the next one, I'd just like to chuck up a poll, actually, because obviously 86% of people at the start of the session today didn't actually know where their KiwiSaver funds were being invested. So who is more confident or more likely to switch to an ethical KiwiSaver provider based on our chat with Barry? You'll see a lot of options popping up on your screen now. But yes, if you have any more questions, do fire them through. I've got a couple more here for you, Barry. You mentioned responsible investing earns returns that are on average at least as high as comparable funds. I mean, we saw that on your website, which was great, generally with less risk. Can you explain why then the major funds are still investing in the likes of fossil fuels and weapons?
What a good question. In a way, it's if you kind of understand financial theory, it's all about efficient markets. It's kind of like it's the equivalent of free markets, And the equivalent, the efficient market theory says that the market knows best, and all of the information you can possibly have, the market already knows, and therefore you may as well just go with the market average because you can't be smarter than the market. And in fact, what the analysis shows that if you invest for sustainability or high environment, social governance factors, then what you're doing is you're saying the market doesn't always work perfectly like that. They don't always cost in the future returns from companies with good sustainability standards. And if you think about the fact that many of these financial analysts are sitting in a Trump-dominated United States on Wall Street and with values that I think might be somewhat suspect, it's not surprising that they're discounting issues like sustainability as being important. And so, that's where you get the fact that you can get higher returns than the market averages from good sustainability practices. Not only that companies will earn higher returns, it's that all of those financial analysts on Wall Street and in Auckland don't fully value that. So that's a kind of new way of looking at investing. Increasingly, the investing companies, the investment providers, are understanding that, and they are shifting more towards that ESG style of investing and the avoidance style of investing. So we've seen just in the last year just a massive shift in the New Zealand market. So if you're looking for funds, there are now many more options than you had even a year ago. And so that's really good news if you're looking for funds. They're better funds and there's more of them.
Sweet. This is an interesting one. We're starting to see major banks such as Kiwibank turn down lending to fossil fuel companies. Are the tides turning? Do we expect other banks to follow suit?
Isn't that cool? I was really pleased as a trustee of 350 Aotearoa. It was definitely their campaign that had a significant impact on Kiwibank, and I was pleased to kind of help out in different ways. And I was actually part of when Radio New Zealand came about the story, and Shane Jones had been saying, "Oh, gee, this is just woke and broke," was his formulation. It's not woke and broke at all. This is kind of an ethical banking decision by Kiwibank to say we care about what happens to the lending that we do. We're not going to lend to the fossil fuel sector because we want to be part of the solution to climate change. I think it's a really good ethical policy, and increasingly there are other banks around the world that are doing that as well. So I think it's very sound banking policy, and I'd like to see other banks do it as well, and I'd like to see Kiwibank's investment arm, that's called Kiwi Wealth, also do it.
Perfect. So I've got one more question for you, Barry. I was reading an article that you wrote regarding the book, The Value of Everything. You mentioned that money makes the world go around, and obviously companies won't radically reduce their emissions if it lowers their short-term financial returns. What options does this then give us for reaching the targets set out in the Paris Agreement?
Yeah, great book, by the way. It's an author called Mariana Mazzucato, and she also wrote a great book called The Entrepreneurial State. But her whole thing is all business is not the same. There's value creating businesses and value destroying businesses, and all the kind of polluting, exploiting, predatory lending businesses are value destroying businesses. And I think it's a really important insight. So what does this mean in terms of meeting the Paris goals? You know, I've spent kind of much of my life on climate change and sustainability. I've become convinced that it's not only the economic levers that are important, it's particularly the finance levers. And so when I say there's this big move happening from consumers to go towards ethical investing, and a big move from the industry that is then saying, okay, we should go ethical as well, then those changes are really significant in terms of the change for to release finance into climate solutions. And that's the thing that I think is going to be really important.
Perfect. Well, I've just got the results back from the poll, and over 60% of people have said that they're a lot more confident now to switch to an ethical investment option. I know I am. I mean, as I said, I was by default in the Anz Growth Fund, which again, I think the returns are not actually that great when you compare it to a lot of those other providers that you had up on screen. We've obviously got a lot that are more confident, some that are somewhat, and only 5% that are the same. So yeah, I think that is really good. So yeah, hey, I'd like to, on behalf of us all, I'd like to thank you so much, Barry, for taking the time to talk to us today. I'd encourage everyone to go and have a look at the Mindful Money website. Like myself, I think you're going to be shocked when you find out where your KiwiSaver is being invested. If you've got any questions or you'd like to get involved in the Now Crowd, then get in touch with Ayla, AYLA at sustainable.org.nz. You can also follow the Now Crowd on Facebook to keep up to date with our events. And fingers crossed that we're going to be back at level 1 in Auckland soon. So the Now Crowd will be putting on a face-to-face event. So yeah, I'd like to thank you all so much for attending.
Hey, Connor, can I just add one thing? If anyone wants their organisation to have a look at this stuff for staff, you know, as part of a CSR thing, just get in touch with me, Barry, at mindfulmoney.nz, and we'll come and do a seminar. It's kind of free, and it's a really good way to engage staff with these issues, as well as kind of our own individual actions. So thanks very much for having me.
Perfect. Thank you for joining us.